And yeah, so Happy New Year. If you're new on the call, if this is the first time you're joining, this has been this has been on since 2024, January 2024, same date as we started last year, um, second second or third Monday from 2024, and it's it's been more like culture. So if you're new to the RionFx family, so if you're new to the RionFx family, welcome, and enjoy your stay. I don't know if you guys can see my screen. If you can see my screen, just leave a reaction for me, or just leave a yes in the chat section. Okay, thank you. Okay, so I see Lucky Makama saying they're new here. I can see Harry as well. Thank you guys so much for joining. So as usual, we would head to the case for the day. Tea and chat basically is supposed to be like a lounge session where we sit, we discuss, we look at charts, we talk about fundamentals. We try to balance the use of fundamentals and technical analysis to create a sentiment, around the market. We share analysis, insights, and also a safe space for traders to be able to discuss their insecurities as traders, and we, somehow find a fix for that. And we shed light on how our previous weeks or week was, trades, highlights, breakdowns, teardowns, whatever the case may be. And in subsequent sessions that would hold, I would also be inviting guests to to share in this adventure with us, to come and share insights on how they trade, their styles of trading strategies, talk about their psychological challenges and struggles that they had to go through before getting to wherever they are, you know, and that's supposed to kind of help different people on the call, because I believe as traders we all have different trading methodology that we apply to the market, so it can't always be mine. I feel like there's a need for each and everyone to be exposed to different styles so that you can look and see which of them relates better with you, and then you can adapt. You can follow that and find your own person. So in in the highlight of everything I've said, welcome. So today,
we should.
today is going to
Which
be
one are you? Something I should.
today is going to be more of an introduction to how everything works out on tier and charts, just for the newbies. And if you're a newbie on this call with absolutely no experience in trading, I don't want you to feel left out or get overly confused. So I always do my best to simplify everything I say as much as I can, considering that you don't have so much knowledge on technical analysis. So I would use simple terms like support, resistance, demand, supply, candlesticks, and all of those things to make it easier for you. If you can see my screen right now, I sent out an analysis video on my social media channels early this morning on GBPJPY, where I plotted out a buy scenario, okay, on GBPJPY here, which is presently the trade I'm on. But I just made like earlier entries ahead of the London session, okay, and I just hit my first TP, risking 7 pips to target 56 pips. So TP hit on that trade already. I couldn't call it because it moved before the session. But in light of that, I'm just going to do a complete breakdown as I had promised on the GBP trade. Let's just open up a new chart completely. And while we are at this, you can kindly just leave your personal experience, questions whatsoever in the chat section. So I'll go over them as I'm analyzing the chart, and then I would answer some of the questions. So let's have like an interactive session. If you're in a noisy place and you can't unmute yourself to talk, you can leave in the chat section. If you want to speak or ask a question, just use the action button to put your hands up, so it would notify me, and then I can unmute you. So you go ahead and ask your questions. Okay. Just in case you can hear the bark of my dog, please just, totally ignore him, or her rather. It's female. Okay, so the breakdown I posted on GJ was from the monthly time frame. Okay, so we did a breakdown from the monthly time frame and what I was looking at. So on the monthly time frame, we have GJ doing this respect levels from 2011, 2008, and then we have this monthly highs. Okay, so for newbies, would refer to that as resistance. Okay, so we have this monthly resistance at this level here. Now, over the course of last year, so we'd start from December of 2020 as usual, before the year closes. And we saw GJ finally break, and we can clearly see that the trend that has been on the move for the past, how many years? 4 years, has been economy, has been suffering, okay? Low interest rates, no investments, and all of those things. So every other currency pair has consistently and confidently been buying against them for 4 years. Okay? So let me just take that out. Now, in respect to that, after breaking this monthly resistance that we identified here, which is like an all-time, I won't call it an all-time high, but a mid-term high for a couple of years. So we're looking from 2015 all the way to 2023. This was the high that was protecting all the market was doing before market started to trend to the upside. Just before that break, we had this bearish candle here. If you're not new to the market and you have some knowledge about smart money concepts and institutional trading, you'd easily identify this to be an order block, because it was the last bearish candle before the rapid momentum to the upside that did what? That took out liquidity. So above this levels here, above this resistance here we are. So we have what we refer to as a break of structure, because this was the last lower high that failed to create a lower low here in line with the downtrend. So we have a break of structure here. So this became our order block that broke structure. So we then have we then created a new higher high to the upside. So now what prices did around August last year was prices pulled all the way back. So we had like a correction. Prices pulled all the way back into this order block, what would technically term as a return to order block. Return to order block happened here, and what did we get? We got a massive rejection candle. I fuck with candlesticks a lot because I feel like they are one tool you use as a trader that gives you it gives you a whole lot of insight, especially on the higher time frame. So when I use candlesticks, I like to use candlesticks from like the 4-hourly time frame. That's intermediately. If I'm looking for probably like an intraday trade, I would use like 4-hourly time frame. But candlesticks on the weekly, daily, monthly charts are like very important to me, because they literally tell you everything you need to know about that whole period. So be it the monthly, be it what has happened in a month or what has happened in a week, it gives you like a whole idea about it. So we have this massive candle here, okay? This massive rejection candle here that happened, and this candle is a pin bar candle from downside, or you want to call it a dragonfly candle. Now, a dragonfly candle is a bullish, rejection candle, meaning that there are buyers situated at this zone, which obviously is supposed to happen because we have a bullish order block. So meaning that there will be buy orders at this point. So we're expecting buyers to be there, and that reacted nicely. Okay, so let me just let me clean some of this. Sorry, clean some of this out. Okay, so we have this bullish order block here reacting nicely with a rejection candle from that level. It's a bullish rejection candle from that level, meaning that now prices is maintaining bullishness, and we are supposed to trend higher. But now after that, September followed and we had some level of indecision in the month of September. Prices failed to do what? To close higher above that previous broken resistance. In October, we pushed higher and we were able to see above the resistance again to come back into this previous bearishness that returned prices into that order block. In November, we did the same thing. In December, we did the same thing. And now, likewise, in January, we are still struggling to close above here. Now, I am in no doubt believing that prices is most likely to continue bullish. Why is that for me? Is because the order block situated here is a monthly order block. It's not just your 15-minute order block that's okay, prices will just react off of it. Now, price is fractal and consistent in the sense that the same way things happen on a higher time frame, they would happen on a lower time frame. And similarly, how they happen on a lower time frame, they would likewise happen on a higher time frame. So the same way you expect that that impulsive move and that impulsive push, when prices get to an order block on a lower time frame, you'd be expecting to get the same reaction on a higher time frame. So I'm still expecting that bullish reaction from this monthly order block. Now, this is a consolidation here. Okay, prices are consolidating around here. And if you play with chart patterns a lot, I would want us to just take a look at what's happening here and see if you can identify some type of chart pattern. Okay, and if you're new to chart pattern, there's something called a bullish flag. Okay, a bullish flag pattern is a bullish continuation pattern where prices impulse for a bit, then fulfilling the higher impulsive move. Similarly, we have something like that forming here on this candlestick. Okay, so we have the pull. So this impulsive move is referred to as the pull. So we have the pull sitting here as it's consolidating nicely just within this range. So what we have some sort of bullish flag pattern. So my expectations exactly are this present monthly candle. Okay, so whatever happens within this month should fail to break this previous lows here on the last monthly candle, or if at all, would get a sweep off the last monthly candle where most previous buyers have their stop losses engaged. So this will serve as an area of liquidity. So we'd have prices sweep if at all prices wants to move to the lower side. So we get prices sweep that liquidity, take money off the market, to facilitate the move to the upside, and then continue higher. Because fundamentally, yeah, someone said rally-based rally. Very true. So fundamentally, the JPY or the whole Asian economy right now is on a benchmark, okay, of between political crisis, economic crisis, lowered interest rates, no investors, and all of those things together is putting a slow on its economy. If you look at the Japanese index, you would see it doing its best to rally at every point in time. It has had every chance it gets, to rally to the upside, but we've been consistently going to the downside. I mean, for months on months. So this is what the Japanese index looks like since 2020. Okay, this pepper stone, it doesn't have like so much, but I'll get a different broker very soon for the Japanese index. So you can see we've been bearish on the Japanese index. Okay, and similarly we had this sweep on liquidity. You can see the candlesticks, you can see the level, and we're just having prices push into the downside. So look at it on the 4-hourly time frame. So let me just I usually like having trading zones for my intraday trades. That's another very helpful tool you can use. It's called session breaks. It kind of help you see what has happened through every day. If you're a scalper or you're an intraday trader, it would help you a lot. So you can just kind of gauge, the what's this for? The market cycle for the week, So normal market cycle, accumulation, distribution, expansion, or accumulation, manipulation, and all of those things. If you use the session breaks, you could tell on what days each of those phases or cycles happened, and you could study them ahead of your following week. So you kind of just have an understanding that if market rallies Monday, Tuesday, it would probably consolidate Wednesday, Thursday would, probably manipulate the market or expand the market, and Friday would bring in the distribution. So you could use that as well. So let's leave that side talk for now. Okay, yeah. So I was talking about JPY, the JPY index. So you see prices is pushing in closely into this area of previous supply here. So why it's a supply for me is it cleared this internal structure there, then broke the major structure here. So this would serve as a supply point. So what I'm expecting is for prices to linger into this area a bit and then shift, then we'll continue bearish. Similarly, that's why I was buying GBPJPY when you saw it this morning. So let's leave the monthly time frame now and look at, and let's go into the weekly time frame. So I'll quickly just draw these lines back. Okay, so we'll use this. So I would like to call that a major resistance zone. So you can see that here, major resistance zone. So let's look at the weekly time frame now. So on the weekly time frame, this was our previous monthly order block. So we can refine it, okay, into this extreme block here. And that was exactly where the touch happened from. So we had the first rejection. We had prices pull back all the way to that rejection just to kind of like test the strength, okay, the strength of this bullish area, and prices came back into that monthly order block before going to the upside. Therefore, breaking structures, creating series of higher highs. Okay, so this is the last point where we are at. Market created some sort of double bottom here on the weekly time frame. What I personally see from this level here is a place point of liquidity. Can we still see my screen?
Yeah, sure.
Okay, so just give me a moment. Okay, are we back? Can we see my screen now?
Sure.
Okay, good. So we're looking at this levels here. Okay, so I'm mapping these areas out here as a possible area of liquidity. Now I'm expecting to see prices play on this. Remember I said on this prices might want to take out the previous month lows, which was December, and this is where they are. This is where the December lows. Now the reason why I have this area mapped out as a possible area of takeout is because if you look below here, we have this unmitigated level here, this unmitigated block. Now, this block was responsible for what? For actually breaking structure to the upside here. This was the other block that did what? That facilitated the move to the upside here, breaking this structure here after creating some sort of, probably like a double bottom or something. Now, we had prices act as if they were actually, pulling into this zone, but we just stopped at the tip edge. Okay, we stopped at the very edge, of this zone. So I'm assuming that prices would use this as engineered liquidity, which you can further or otherwise refer to as an inducement. So if prices sweeps this inducement, if prices comes lower, then it's definitely targeting this level as an inducement, looking for about 50 to 61.8% of this order block, and then would get that rally. So this would be what would be the momentum that the market would need to eventually do what? Sweep out this buy-side liquidity that's resting just above this double top here. And then if you look at it properly on the weekly, you can clearly see that all of this is just an internal structure. It's just an internal structure. Sorry, guys, I want to close my trades that I opened earlier. Okay, so yes, so that being said, before I go further, does anyone have a question they would like to ask? So let's. If you have any questions, if you're too shy to upfront ask it, you could leave it in the chat section. And if you don't want everyone to see it, you can send it directly to me through the chat section. Just change it from everyone and forward the message to me. I'll answer it codedly, of course. Because I understand some of us are shy when it comes to things about our knowledge. We don't want to feel pressured or feel like we don't know so much. And that's totally fine and understandable. That's why you're here. You'd overcome it because you'd always ask questions when you're me. Okay, so yes, so let's scale up out this low here as a possible engineered liquidity. So would call this liquidity an inducement. Usually, what an inducement to do. So let me use this opportunity to just break down like the difference between regular liquidities, buy side, sell sides, and all of those things. So for an inducement, yeah, most times is you could tell an inducement when it's not able to break previous, when that particular low is not able to break previous high, and at the same time that particular low did not fully I don't want to use the word mitigate. It didn't fully respect, whatever order flow it's supposed to be. So like order flows usually would have like a systematic structure to it. Okay. So sometimes you see prices would consistently return to order blocks, or prices would use like discount levels to move. So when you're studying a pair, you can study its order flow to understand how it works. Is it using order blocks? Is it using breaks and retest? And then the breaks and retest most times would be like in discounted zones and all of those things you get. So you can study it. Now for GJ, presently, you could clearly see how price was returning to fair values and order blocks as well. So now you can tell from an inducement when the inducement has not, completely, I don't want to use the word fulfill. I don't want to use fulfillment. God, I'm lost of words. But basically, it hasn't done what it is supposed to do. It hasn't met the full requirements, to enable it continue in its order flow, in its natural order flow and structure. This is one of the things you can use as an inducement. Secondly, I said that particular low would fail to break the previous higher high. So this was the previous higher high here. So you can see that this particular low failed to break this higher high or create a new higher high. So that's one of the things you can easily use to identify an inducement. And then just under that low, you would most likely see an unmitigated OP or a fair value. So those are the two things that I personally use to identify inducements, because for a certain that this is an uptrend, but price for some reason is just creating some sort of internal confusion. That's usually the inducement is. Now, inducements, if you're new to the term, is just a way where the market engineers more liquidity into the system. In order for big banks to fulfill their orders and everything, they need to be imputed into the market. So if there's not enough money for them to complete transactions, what they will do now is to engineer more money into the market. So when you hear the term liquidity, it's basically just talking about money. So they need more money to come into the market to be able to facilitate their trades. So when they see that, okay, probably they want to execute a trade of like, let's say 200 billion, and what's in the market is like 120 billion. Now they need to engineer liquidity into the market, because the market is, you're losing, someone else is making. So the money you're losing is being transferred to someone. So that's why you always hear is the transfer of wealth from the experience or the prepared to those who are inexperienced or are in a hurry, you get. So that way they can engineer more liquidity into the market and then execute their trades as well. So let's look at let's scale upper, okay, to the daily time frame. Yep. And on the daily time frame, we can see this on the daily time frame, okay? So on daily time frame, we have you can clearly see the uptrend. Okay, you see the first touch. Okay, so we have market creating series of what this was our first low. So this is our lower low. Then we have a lower high here. Then this was our first high. Then we had a higher high, higher high. Okay, here at this level here. Then we also have a possible is a higher low is most valid to me when it has been able to sweep a previous higher high to create a new higher high. So in terms of when we're looking at structure, yeah, so this is a bullish structure, for instance, the most important parts of structure is the ones leading prices to the direction in which the market is heading to. So our higher lows, for instance, are the key places for structure for us. Okay, the higher highs are like areas that we want to break through. Okay, they're like benchmarks that need to be cleared for market to keep going. So resistance, support. So when you hear resistance and support, this is one way to view it. Okay, so now a higher low is most probable to be referred to as a higher low after it sweeps a previous higher high. And this has failed to do that. And that's exactly why I said what this area seems to me to be what a possible inducement level. And just under this level, what do we see here? We see a previous unmitigated what block. So this was the bearish candle just before the rapid momentum move that did what that broke structure. What structure did it break? This internal structure here. So this internal structure here was what got broken. So what do we have now? We now have some sort of shift here or a change here, and we broke it. So liquidity sitting above here was taken. So prices needed to do what? Prices needed to do what? Pull all the way back into this unmitigated level. Now, if there are no resting liquidity, I call it resting liquidity. So that is prices moving and leaving its liquidity probably around 30% just before the order block is going to be a resting liquidity. So if assuming these sales had come all the way down here, failed to do this, and then this came and swept it once, this would have been an area of resting liquidity for me. But prices failed to do that. Instead, prices created a new higher high and they started to sell all the way back and didn't mitigate this order block again. Instead, it pushed all the way higher again and failed to break this higher high, meaning what? This could have been a possible area of what? Inducement. They're just basically engineering liquidity. So there's not enough money for them to actually move this price immediately. So they need to keep more money in the market. So now there are people selling at this point. Now sellers for that matter. So stop losses are all resting above here. Stop losses are above here. Stop losses are above here. Day trader stop losses are all the way everywhere here. You get, and then we're going to keep selling possibly till we activate this other block. So this would be an adjustment. Then we get the actual higher low at this point, and then prices would do what? Rally to the upside. So price rally to the upside, where would it be targeting? It would be targeting where this buy side's liquidity, because they'll be resting liquidities above this level. So this is basically the whole concept of inducement and the need for them to induce market and keep prices. Hope I'm not confusing the newbies on this call. Don't worry, you're going to have your time. You're going to enjoy every session as it comes. There will be classes, okay, for the newbies that are just joining my channel. I'm planning to have like a free boot camp, at least 1 week in every month, that would allow for us to train you, explain things, break things down to you, and watch you grow with time. And I would always share materials that you can read on and everything to help you. So let me just clear this. Okay, so we could scale higher. So we could scale higher to the 4-hourly time frame now. Okay, so yeah, so using this now, let's go to the 4-hourly time frame. Yep. So on the 4-hourly time frame, we had very good move, okay, to the upside. We had a series of clear buy momentum to the upside, and then price failed to create a new higher high. Yeah, so we had some sort of what again, double top. So this was one top, two top. We have some kind of resistance turned support level for me. So we had resistance, support, turned resistance again, and prices sold up. So we're clearly seeing sell momentum back into the market. So now we can say we are bearish because why? We have this higher low that did what? That failed to create a new higher high. Rather, it went and swept the internal liquidity that was sitting here, came into this area of previous supply here, and then sold off. So now we've confirmed bearishness on the 4-hourly time frame. So here now we can look and say, oh, we have, what do we have here? We can say we have a break of structure here now. Okay, so this is resting liquidity. This would be the supply that broke structure. So what I'm looking for right now is a reaction of this previous order block here. Okay, so this order block here is responsible for doing what? For actually moving prices to the upside. Okay, so I'm looking for a reaction of this order block. This was what I was trading, a reaction of this order block, and then waiting to see market shift. Okay, I want to see a shift, and then a midterm buys all the way to this level here, or most likely this resistance level here. So we have previous support level here, this area here. Or sometimes when I see support, and I see resistance around it with lots of rejections, I most likely will always term that area as a possible area of liquidity, because I feel like a lot of sellers that took these sales have their stop losses here. So one thing with the market is always going to take out the early entries in order for it to get a free flow, of prices to the downside. So I want to see that shift happen, and then I'll stay bullish for a while until I do what? Until I get to this point, and then I'll sell off. I wrote on this lines here, this was our monthly resistance. Now, this is the resistance line that we saw from the monthly time frame. So this is a key area for the market. So prices will want to come back into this area, definitely, before continue to the downside, and then coming back to break it, sit on it, and then we continue bullish, probably maybe from February or March, whatever the case may be, depending on the volatility that market comes with and how market reacts to every fundamental that is going to happen within the course of that time. Okay, so let me just quickly clean up all this, my scribbling of the charts, and plot it out well. Sorry, I'm teaching a lot of scribbling. I feel like it's better used to explain what I'm trying to say. So right now we have this area. So this area is very key to me at this area. Now within this area, I can easily map out. This was our previous highs. Yeah. Then we have our break of structure at this point here. Okay. And then we have the supply OB that facilitated that move to the downside. And then I'm identifying this area here as an area of liquidity. Find that area as an area of liquidity. So I'm looking for a shift from where? From this level here. I'm looking for a bullish shift from this level that would take prices, okay, all the way back into this zone. Okay, it might be this zone. Prices might react off this zone. Okay, like this, or we'll see prices come here, and then continue bearish. Okay, like this. So this is like the idea I have in my head. Now remember, we are nothing but speculators in this market. That's why there's always an argument when people say, "Oh, trading is a gamble," or "Trading is gambling." To be honest, I've always said that trading is gambling. But the problem here is the mindset people have about gambling seems to be wrong. You get, gambling is not entirely a bad thing. But the fact, life itself is a gamble. You get, life itself is a gamble, and it's all about putting the right things in place in hope and in anticipation that you'll get better from it. So anything you do with a hope to get something in return, it's a gamble. You don't know if you're going to die today. You don't know if you start your car and you start driving on the road. One trailer from somewhere will hit you. But regardless, you do it. And the reason why you're doing that is you now have a certain level of faith that comes with it, that, oh, I know I'm a good driver. I know I can withstand the madness of Nigerian drivers on the road. Do you understand? I'm mentally prepared for this. I have a destination I want to get to. So you're taking your car, you're driving in hopes to get to that destination. But whatever happens within the confine of that movement to destination is really out of your control. You get. But the one things you can do to kind of feel like you have control over it is to what? Is to plan and be careful about how you're driving, what lanes you're using, make sure your engine is good, your car is good, and all of those things. So similarly, it's the same way it works with trading. What you do and the results you're going to get are on two parallel ends. But what takes you from point A to point B is your ability, to try and control what you can and leave the rest. Because what the market is going to do at the end of the day is entirely the market business. So in order for people to prove to me that trading is not a gamble, they would have to clearly state to me that they can see the future. Then I know it's not a gamble. So anything that you do not know what the end or the outcome is going to be is a gamble. The problem is most people think of gambling from what we heard growing up as children. Oh, you're going to play cha-cha, you're going to play kalu-kalu. Gambling is a bad habit, or there's an addiction to gambling. Every day is a gamble. Like if there's an addiction to gambling, we're all bloody addicts. Because you're waking up this morning, you're probably hitting one girl you're crushing on that doesn't like you, but you're doing it in hopes that eventually she's going to like you too. Bloody gamble. You get, you're in someone's DM begging for money, and you probably don't know if the person is going to give you the money, but you're doing it. Gamble. The only difference with trading is you're putting something on the line at every point in time. If you're in someone's DM begging for money, you're putting your steez on the line. Get me? So you just have to understand that, and understand that we are all just nothing but spectators of the market. It's just speculations we have. But the difference here is what we can control is our risk and our knowledge. How much do you know? How far do you know? What do you think you know that can give you an edge and can safeguard you and your view and sentiment on the market? Then the most important thing next is your risk. How much are you willing to lose on the trade? Now, the foreign exchange market has given us that capacity to understand that, to use it while it's being provided. Now, the problem is some of us don't know how to manage our risk, and that's where the real problem always comes from. Okay, so this could happen the way I have explained it, or it could even just bounce off and continue selling till it finally sweeps out this inducement. That's possible. I mean, it's GBPJPY, and I know GBPJPY for a certain that it can do crazy moves. Because if you take this same amount of sales it did here and it replicates it here again, you see that we've gotten to our destination already. Or we'll see prices consolidation pattern, probably like a rising wedge, and then prices just fall off of it. That's also possible. So it's just with the knowledge that we have, and then we want to do what? We want to sit, wait, and execute. So at every point in time, we're like snipers in the market. The one tool that you can help yourself with, your emotions and your psychology, is the ability to wait. Sometimes you just sit on your hand and do nothing. You need to see opportunity present itself. Then you can then turn it and say, oh, that's an opportunity. I've seen this happen before over and over and over and over again. So what am I going to do now? I'm willing to take a shot at it. And how do you do that? Place a trade, you set your risk parameters, and what happens? You're gambling because you don't know the expected, you don't know the end. You only have an expected end. You get. So that exactly is it. So let's scale higher, or should I say let's scale lower? Okay, to the 1 hour time frame, and let's see what market is doing on the 1 hour time frame. Okay, so on the 1 hour time frame now, we have a series of rejections on the 1 hour time frame. Just a moment, please. So we have series of rejection here on the 1 hourly time frame. So I'll just go to the 30 minutes time frame so we could see it clearly. So in 30 minutes time frame, we have prices tap that this level I wanted to get reaction 3. Okay, so 1, 2, 3. But the only problem I have is with these 3 touches, market is still creating lower lows. So I need the market to start giving me, I need to see this candle start to close on the higher side. Okay, I need to see market start what higher highs to the upside, or I get like a rounding bottom. A rounding bottom is a reversal candlestick arrangement. Okay, where market to higher highs, and then I want to see a key level broken. So this would be a present support level that was broken. So we can get those rounding highs, okay, and then we break above it, pull back, and then we can then complete the move to the upside. So let's look at the 15 minutes time frame, and then you see what I'm talking about. You'd see the structure better on the smaller time frame. So let's look at the 15 minutes time frame or the 5 minutes time frame. Okay, so this is the 5 minutes time frame. You can see the lower lows, and then we had this major low here. Okay, so you might be wondering how I took the trade I took earlier on. So I took the trade off an aggressive entry. I saw prices break this low here, okay, and broke the interim high at the moment here. Okay, so we had like a kind of change of character happening here. And just right after that change of character, I saw prices do something I like to see, which is a sweep. So see price didn't close. It didn't close below it. What we had was a wick. So this is a clear sweep for me. So this was a sweep on the early buyers. So early buyers were people who started taking these buys from here. So what it did was sweep the early buyers and then rally to the upside. And then the moment it did that, it then broke structure. Because remember, we really changed character. So the change of character, basically, if you've never heard it, is where prices shift the market from, probably previous bearish momentum and pushes it, above it, taking out the most valid point of structure. So in a bearish structure, we know the lower highs are the most valid points for the market because they are responsible for doing what? For pushing prices to the downside. So lower highs in a bearish market, and then lower lows are just the benchmarks and barriers that need to be broken. Tip of the day, if you're ever trading, okay, and you don't know where to set your take profits, like your most immediate take profits, always use the previous lower lows. So if you take an entry here, the previous lower low should be your major first target, your place of first take profit. Then you can target lower if you have like higher time frame targets and all of those things. Similarly, in a bullish market, okay. So if you take a trade on a low, you want to target the higher high as your first area of take profit. Then you can go higher as you so wish, depending on where you're taking the trade from. So now we're going to use this particular trade now to see how we can spot an entry. So now we have the, should I call it, the most basic entry model that I personally use, which is the change of character, break of structure, return to order block, and you take the trade and your stop loss below it. So if I was to look for a setup here now, I said we already have a sweep on liquidity here, okay, and then we have the break of structure here. So we have a sweep on liquidity here, and then we have the break of structure. But now something is missing. I can identify my order block. Okay, so this is my order block sitting pretty here. This was like last bearish candle before the rapid move to the upside. I wouldn't use this one. I wouldn't use this originating block here because I feel like this last bearish candle kind of mitigated it already. So let's look at the 3 minutes time frame and see. Okay, so on the 3 minutes time frame, this would be the OB. Okay, we have an extreme OB here, the 3 minutes time frame that was not mitigated, which is this level here. We just had prices sit above it somewhere here. Okay, so let's map that out as a possible smaller time frame liquidity. Now, two things can happen here. Okay, now this would have been a very good liquidity for me to say, oh, okay, I can identify this as the liquidity before my order block. But remember, I said the liquidity I usually would like to see or use is the one that is resting anywhere around 23 to 38% before the order block. So if I plot my Fibonacci now from this high to this low here, you'd see that we have 61.8. So let me plot it in reverse. So you see what I'm talking. Yep. So this is in reverse. See that my liquidity, the liquidity I picked is resting where under the 38.2%. So this I would probably map out as liquidity for this block and use this block again as my RTO, my return to other block, and take my entry from here again. Or I wait to see how prices would consolidate around this level to create like an inducement, act as if it's going up, use this as my liquidity, then wait for prices to come back and sweep it. Then I'll take the trade. So that's one thing I can wait for. So I'll probably just sit on my hand and wait for that to happen. And sometimes I can be aggressive enough to want to even use like a previous break and retest of resistance, which if you had done here, you'd have been in profit for a while, and then market is running against you. You get so entry for this trade right now, after we've analyzed it for so long from the monthly time frame, I would be looking for entry here, stop loss just up below this level at 20 pips. Okay, and I'll be targeting my first take profit will be here, this highs, which is about 80 pips. So that's a 1 to 4 risk to reward ratio. Then I'll look for higher just here, this series of sell candles without bullishness. So this would be like an area of imbalance. So this would be the next TP at 142 pips. And why I'm using there is you can clearly see the previous point where major sellers were. So there's liquidity resting here. All their stop losses are here. So we get this level. And after this level, then we'll target this level too as well. Okay, but you definitely want to see the market trend. Now, mind you, I'm not going to enter this trade immediately. Okay, when prices come down into this level, I will need to wait for some sort of confirmation. I want to see like a shift again. Okay, so I want to see market create a solid higher low. I'll go to like the 1 minute time frame and see that the 1 minute structure breaks, returns to as well, and then I would engage the trade, and then over time, I want to see the market break highs, create lows, and then I'll probably just keep catching it till I get that retracement. And if you look at this level that we mapped out, this is our monthly resistance zone here. You can see a huge imbalance sitting pretty here in this place. So this is a very good zone for sellers to come back into the market. And that's that on GBPJPY. So if you have any questions now whatsoever, please let's have those questions, because I feel like I've been talking a lot about GJ and everything. And yes, if I did make sense to you, if you understood clearly what we're saying and this breakdown was helpful to you, just leave something in the chat section. Let me know that with me. Thank you guys so much. I see someone saying you're really helpful. Thank you, inspirational, crystal clear, clear. Can you see UJ understood the stop down approaches in our Forex concept? Someone is asking me to look at UJ. Okay, so first of all, before I quickly look at UJ, what I would say is the dollar is highly fundamental at the moment. Okay, so anything relating to the dollar, especially the dollar being the base currency, you want to be a bit skeptic about it, up and down here and there, just try and be very careful about it, because you'd see a whole lot of range, crazy moves, and all of those things. If you look at UJ is in what's the name of this pattern? It's in a rising wedge, yeah, but this rising wedge that is happening here is at the top. Some people call it the oh God, they call it the rising wedge of death. That's what they call it, the rising wedge of debt. That's because you can see it, it's kind of like squeezing in. It's just consolidated. It keeps consolidating. It's just doing this. Okay. So now the problem here is in this motion, you can't fully tell what the market wants to do exactly, if it wants to break higher or if it just wants to crash. So that's why they call it the rising wedge of debt. You might take the buys here and price will sell against you. You might take the sells here and price will buy against you. So either ways, you probably might just be fucked. So the best case for me is identify a level, and not just any level, a higher time frame level, and play from that zone. Now, what I'm going to use is I'm going to transfer the insight on GBPJPY into USDJPY. So take, for instance, on this higher time frame, we have this break of structure here on the 4-hourly time frame, which was a break in continuation of structure here. And just before that break, what did we have? We have an order block. So this was the order block before what the rapid momentum shift that broke structure. Now, what I would look at this whole level as would be liquidity. So I usually use this tool. I like to call it my liquidity cup. Okay. So now, because a lot of people are still buying at this point. Yeah. So what I would do is I'll map this area as a possible area of liquidity, waiting for this order block. So all I'm seeing here now is just inducement, purely inducement. Yeah. Purely inducement. And considering the fact that GBPJPY has done its sells, EuroJPY has done its sells, NZDJPY have all done their sells, it's only USDJPY that has been buying, and that is because the USD is fundamentally strong. Like there are a whole lot of sentiments making it strong, considering the fact that Trump is now president. Economically, we have investors, billionaires, banks, and everybody expecting a boost in the economic situations of the country. We have trade relations with the US getting better ahead of Trump's inauguration, and it's keeping the dollar afloat. We have their interest rate high, so meaning that a lot of investors are pulling money into the USD. In fact, they've been keeping that one on the high side since middle of last year, trying to hold up inflation and invite investors, to kind of even out their debt. They needed a favorable balance, within their economy. So they've been doing that since. So the dollar has constantly been on a high, so you have to put that into consideration as well. So I feel like any move USDJPY is going to do is going to be very sudden, and CPI might be what will dump this market this week. I don't know, but I'm just going to watch and see. But if for any reason I get a break, I see a break on USDJPY, okay, and I see prices, play outside this level, sure, you can take that sell. I mean, you want to see in fact, let's even analyze something here, because I'm saying something. So if we look into this place, I usually don't like to use wicks as break or structure. I like to call them sweep on liquidity. So we have this sweep on liquidity here. We have this sweep on liquidity here. And then we also have this dual break here. So we have like a break or structure here. But might still not be enough for me. I still want more confirmation. And the confirmation I want now is for prices to actually break out of this channel, probably pull back in again and maybe find another block or something, and then drop return again. So the return I'm looking for is like a break and retest of a flip zone, which is a previous resistance turn support or support turn resistance, and then I would find those shots and dump it. But I'll have to remind you guys, this year, since last year, I've been focused on just two pairs, GBPJPY, Euro USD. Okay, so I most likely won't call USDJPY, but I would have a member of my team keep an eye on it. So I'll have either mystery trader keep an eye on it, or Solomon keep an eye on it, or Damilola, one of them will keep an eye on USDJPY. And when it is ready and set and fits in our methodology, I'm sure they'll definitely call it. But GBPJPY, Euro USD, those are my most traded pairs, and probably would be my only traded pairs this year, except for US 100, NASDAQ, once in a while here and there, just to make me feel alive, some level of risk and fast movement. Yet, so that's that. I hope you're okay with that on UJ. I don't want to start doing I don't start doing monthly all the way down. Okay. Okay. Someone saying something? Okay, guys. So thank you so much. I see. GU still bearish for me. GBP USD, Euro USD. Now they've been bearish enough throughout last upper week, towards the ending of December. I've been during the Christmas time, they were all bearish. So I'll be expecting a retracement. I'll be expecting a pullback. The pullback on GU to make GU and EU buy would cause USD JPY to sell. Because in order for GU and EU in order for base quote USD to buy, we would need base USD. Yeah, we need quote base USD to sell. So we need to see a drop in the price of dollar in order for that to happen. Okay, so I'll definitely try and analyze GU and other pairs as well, just to play around them a bit and send them to the group chat. And before I leave, I said this year I would always try to say something to encourage us. I am not the what do we call it? I'm not the best trader that there is out there, but I am the best trader that there is where I am right now. Now, what I mean by that is a lot of us pay so much attention and pay so much focus on other people's life that we tend to forget about our own personal life. And the mistake we make here is everybody, have their own individual journey. Your purpose is different, your timing is different, your reason is different, your why is different, everything about your own self, differs to you and is unique to you. And we tend to focus more on other people's life to a point where we forget ours. You see people telling you they know when Habi bought his first car, they know when Habi did this, they know when Habi did that, they know all of these things. But then ask them, how much was the most money you made from trading? How did you make it? How did it happen? Do you have it journaled down? Did you have like a step-by-step process in which you got to that point? Was there something you did? Was there something unique about how you got there? But no, they don't. So the best trader that there is you. You need to be confident enough in yourself to know that you are and you can be that thing that you want to be. You get? And go easy on yourself, go hard on yourself. I mean, Apostle Femi Lazarus said something in one of his clips that I watched where he was preaching about change. And it was like, for radical things to happen, you have to do radical things. If you want a radical change in your life, you have to do radical things. But that doesn't mean you shouldn't rest. So that's what I mean by go easy on yourself, but go harder on yourself. The harder you go, try to get some rest. Try to encourage yourself. Pat yourself at the back. Clap for yourself. You're the only person who can, fully appreciate yourself other than anybody. So on GG now, we just had the reaction on that zone. You can see the buy, you can see the bullish candle pumping. So now what I want to do here is on the 1 minute time frame. Now, okay, so we had the reaction. We had an engulfing candle at that point. Then we had another bullish candle. So now what I'm looking for now is for prices to, problem with GJ is GJ can be very tricky. It will just, move and it won't give you a chance to return. Prices will come back down a bit. And then you can take entries and you can take entries for the sell. But let's wait. I want to see like very solid bullish momentum here. At least let's cover these two bearish candles here, because these bearish candles then get prices to pull back in a bit, and then we can take. And then, like I said, the only thing we have control about is our risk, and then we can we can maximize our entry and minimize, our risk and all that. So you see, most important thing is get a methodology that works too as well. Okay, so like I was saying, guys, the best trader that there is the trader that is where you are at the moment. Okay, so stop paying too much attention. I mean, follow the people who teach you online, follow the people who encourage you, follow the people who motivate you. Don't just, go playing around everybody showing you lifestyle, lifestyle, lifestyle. And you can see the whole drama and everything on Twitter. Show you lifestyle and then you carry your hard-earned money and you put somewhere and then someone is insulting you and all of those things. It's just it's saddening. You get. I personally had to go. I mean, I still one day I would show those things. I have DMs of me texting, people then when I was trying to learn to please teach me. I didn't have money and all of those things. And most of them never replied my messages, you get. And I was so focused on their lifestyle. Oh, this person just bought the Lambo. Oh, I know this, I know that. And it was just very derailing. So come to a standpoint, sit down, put your head down, learn this thing. I mean, I'm not even quarter of where I want to be. But looking from where I came from in my own story, in my own line, my own life, looking at where I came from to where I'm at, trust me, it's a whole lot of progress. And same thing can be the same for you, and it can change for you as well. So DJ just triggered our entry and moved. So we want to say pull back a bit, and then we'll make entries. Okay. Thank you guys so much for joining this call today. I mean, I appreciate it. It's the first here and chat. Many more is on the way. We're going to leave to see the end of the year. We're going to enjoy each and every one of them to the end of the year. And I'll see you guys on the next one. Please, next one, come with your experiences, come with your questions, anything, anything at all that you that you want to ask me, you want us to discuss about. And next week we'll be having, a guest on the call, my very good friend, Joanna. She's just like me. She used to be a swing trader, but now she's trading strictly gold, making money from it. And she's one person I talk to about fundamentals, and I believe she would share a lot of insight about fundamentals for us next. So I want to see you guys next week on the call, same time, same place. Click on the other link to just add the call to your calendar. So it would remind you. You can even set your reminder to be like a day before so you don't forget. Then it would remind you 30 minutes before your call. So I'll see you guys next week or during the midweek call on Telegram where we'll just talk and I'll check on everybody and we'll see how the week is going. Thank you guys so much. I really appreciate you guys and bye-bye.